Hello, everyone. Thank you for tuning in. My name's Nick Duff, and I'm the founder and developer of Pulse Market Clarity. I want to start by giving you a little bit of background about myself and what inspired me to build this platform. Up until 2012, I played professional hockey. I was a defenseman who played in the Ontario Hockey League, spent some time in the East Coast Hockey League, and also played a bit overseas in British Elite League for the Sheffield Steelers. As a defenseman, I learned that success often comes from positioning, discipline, and understanding the entire ice surface rather than simply chasing the puck. Trading has always felt very similar to me. Since retiring from hockey, I've worked in medical device and biologic sales. I am currently developing my own medical device company, Prothera. Alongside that, I have spent more than 14 years trading equities, equity options, futures options. Trading in the markets have truly become one of my greatest passions. I want to discuss the thinking behind Pulse and what ultimately inspired me to build it. Two individuals had a major influence on my philosophy, and those two were Ed Sequoia and Tom Sosnoff. Ed Sequoia was one of the pioneers of computer-driven systematic trading. He believed deeply in systems, discipline, and process. While on the other hand, Tom Sosnoff was a founder of Thinkorswim, and now today's Tasty Trade, helped popularize probability-based thinking, implied markets, and the importance of understanding derivative structure, which we're going to discuss later in this clip. The more I studied their work and continued my journey in markets, the more I realized that many traders are focused almost entirely on price, and they're overlooking the broader forces that are actually driving market behavior. That realization eventually became the foundation of Pulse. Now that we've discussed some of my background and what inspired me to build Pulse, let's begin by discussing one of the most important concepts in derivatives markets, implied volatility, or IV. At its core, implied volatility represents the market's expectation of future movement. Importantly, implied volatility is not direction. It does not tell us whether a market is bullish or bearish. Instead, it tells us how much movement market participants expect in the future. A simple way to think about implied volatility is the market's anxiety, or I like to go by it as the gas pedal. When uncertainty rises, option premiums generally become more expensive and implied volatility increases. When markets become more complacent and expectations for future movement decline, implied volatility tends to fall. Examples for this might be the Federal Reserve meetings, major economic data releases, earnings announcements, or geopolitical events. Implied volatility will often rise because traders are expected larger future price movements. Once this event passes and uncertainty is removed, implied volatility frequently declines. This matters because one of the biggest mistakes many traders make is focusing exclusively on price. Price is telling us what has happened in the past, while implied volatility can really help provide insight into changing expectations before these expectations fully appear in price itself. This concept became one of the biggest foundations behind Pulse. I wanted traders to observe not only where price was moving, but also how expectations for future movement were changing beneath the surface. Markets do not move solely because of price. Markets move because of changing expectations. I hope this video provided a little insight into my background and what inspired me to build Pulse. These concepts, such as implied volatility, are so important in understanding today's markets. My goal with Pulse has always been simple: help traders better understand market structure, derivative positioning, and decision-making under uncertainty. In future videos, we'll continue exploring concepts such as skew, dealer gamma, volatility regimes, macro conditions, and how these variables can work together to provide a more complete picture of what may be occurring beneath the surface of the market. Pulse Market Clarity is currently available on Google Play and also can be accessed on the web via cme-pulse.com. In Google Play, it goes under Pulse, Market Clarity. The App Store release with Apple will soon to be released. Thank you again very much for taking the time to watch my video, and I look forward to sharing more education content with you soon. Take care.